Okay, guys, welcome back again. Josh FX Pro here. Welcome to my channel. All right, today I'm gonna backtest another pair for the week that played out smoothly with looking at our strategy, right? So here we go. All right, and this pair is still shooting. I mean, it's still shooting. This was like a 3.96 risk to reward. Yikes! If you had held, probably it's currently at 1:5 risk reward, which is good. It's a good one because I don't like going that far. I just like taking to the swing low point or swing high point. But sometimes I do go that far, but I have to trail my stop. I have to trail the stop loss while probably adding more entries. I have to trail the stop. I have to do what I call, hold on. I'm looking through my trading journal. I know I wrote it down somewhere. Scaling in. Yeah, I have to scale in on the pair while trading that fast. So yeah, but then let's dive into it. So as at last week, if you are looking at this pair step 100, you would have seen that there was a change of character to the downside. Market was trending up, right? Then it changed. No, this was not a change. So it was trending up here. So if you know this was the high, it changed character to the upside here. So we're still looking at within the zone, it changed character. It broke structure here, then came back to change character to the downside again. You get now at this point, you probably will be looking for entries along this line and even somewhere here, but this didn't give you an entry for that. So it broke also and changed character to the upside here again as well. So this is why this strategy would help you avoid a loss. If you notice how market was doing all of this, trending to that zone. So at this point, there was nothing to tell you, okay, this market is not going beyond this point. It has not broken structure. So there was no break of structure here yet. So this would have been a way to avoid the market. If this would have come down to break this low here, then there's a break of structure. But at this point, there's no break of structure. So you would have still possibly been holding the market and take a loss. So, but from a daily perspective, we had this happen. This was after the break of structure, then we had a fair value gap zone here. On a daily, it is a candlestick fair value gap, right? We had a fair value gap here, which market came back into on Monday, Tuesday left. And I think it was on Tuesday that you would have been the best option. But if you miss Tuesday, there's Wednesday, Thursday, there's Thursday here, Thursday, Friday, would have joined in. So, but let's see the move on 4 hours. So this is the move on 4 hours time frame. It came down all the way here. And then on Tuesday, we saw this shift. Yes, it trended there, but on Tuesday we saw this shift. It trended into the there was a trend, a little trend. So it trended into the daily what do you call it? The daily fair value gap. So like I was saying, on a daily time frame, it's a candlestick fair value gap, but on a 4 hours time frame, it's a structural fair value gap or imbalance. You get this is where it gapped, this is where it came back and gapped. So between this point and this point, there was a gap that needed to be filled. So that was what market did. So on the 4 hours, we also have this gap in between here where market came. And if you look very well, if you look very closely, you notice that this point here was like a zone. You get this point here was like a zone. You could call this point like a little mini zone. You get, yeah, this point here was like a zone. So you notice we have three confirmations. We have the daily fair value gap, we have the 4 hours fair value gap, and we have this zone. So market came, tapped in on the zone, closed on this beautiful reversal candle, morning star, that formed a fully formed morning star. So this was the entry. Although it came back to like maybe 50% of your stop loss. But if you look at it, it's like 50% or even more than 50% of your stop area. Then it shifted. So this was like on Friday. On Friday, yes, that was Friday by 1 a.m. So Friday 1 a.m. If you had seen this trade on a Friday 1 a.m., then this would have been your entry here. After this engulfing, it's still within the area, it's still within the zone, the buying zone, the buy area, right? Still within the area. It just came in the second time to tap in on this place before shifting. So this would have even been more profitable. This would have been more profitable if you had gotten in from here. Your stop will be below all these formations here, below this formation, and your TP will be just above here. This is okay. Let's just take the TP that we would have gone for, which is at this point. So this would have been like 1:4, while the next one would have been 1:3.9. Let's just call it triple. Let's just say 4. Same as 4, right? Yeah. So 1:4. Yeah, 1:4, 1:4. Right. So but this market went as far as 1:6 for this one, and I think 1:5 for this one. Yeah. So, but that's just what we had for last week. If you were also going to be trading it on the 1 hour, I believe you probably would see something on a Tuesday on the 1 hour there. There's nothing here. There's no gap. There's no fair value gap. Maybe there is. Maybe there's one fair value gap there. Let's see. I think there is just this little place here. No, no, there's nothing there on the 1 hour. So this is why I stick to most times. I stick to the 4 hours time frame too. But then on a Friday here, you would have seen an entry because it came back to tapping on this other block after changing what do you call it, character at this point. See here, this was the last high that brought about this low. So it changed character from this point. So all this was liquidity being grabbed and inducement, right? So it came down at this point to grab this other block. There was a beautiful other block here on a 1 hour. Let me change it to this color so we can differentiate them. Yeah, on a 1 hour, I'll just name it. Yeah, so on a 1 hour, it came down to this other block here. Yeah, to this other block here, tapped it in multiple times, first time, second time, third time, and then shifted. You see, on the 4 hours, where I entered on the 4 hours is like the shift of the 1 hour candle. So this made this proper shift, shifted off this whole area here and started trending upwards. Okay, so that was it for the week and for this backtest video. So if you're following, these are things to learn. You gotta be patient. You gotta be patient, especially patience doesn't just come when you are waiting for the trade, for the market to come to you. You also require patience while you're in the trade. So we waited for this market to do this, and after it did, we entered, put our stop loss where we ought to put stop loss, right? This is actually where we ought to put this stop loss, right? So, and this was the 1:3. Oh, wow. Okay. So then market came back. You see, all this move here now would have pricked you. It would have like given you like a scare, and you would have been out of the market maybe and saying maybe this thing is not, but patience required. You set it and you forget about it. So on the 4 hours, it came back to that same area, to the same area, and boom, it's off, right? So it's a good thing. It's a good trade. It was a good one. So I believe you're learning. If you have questions, please drop me your questions on the comment section. And also like this video. If you're not yet subscribed and you're new here, please do subscribe and turn on your bell notification. So when I post the next video, you're going to see it. Sometimes I also post analysis here. So you could follow through and also make money via those analysis, okay? So the reason for doing this video, I'm also keeping myself in check to analyze, to backtest, to know what the market is doing, and keep myself updated on the strategy. This is why we do this, okay? So see you guys on the next video. Ciao.